A lot of people are saying that I called the bottom a little bit too early and that the market's going to continue to go down. And you know what? They may be right, but I can't really see the market going much below where it currently is now, where it was at the $98,000 level. More important for me is to understand why we are in an environment where Bitcoin can't go up where all other markets are at all-time highs. So like you kind of look at Bitcoin and you say, Bitcoin is struggling to, it like pretty much feels like it's been in a bear market the whole year. If you look at where Bitcoin has been since the beginning of the year, Bitcoin pretty much is more or less the same level that it was on the 9th of Jan, right? And the S&P has basically shot up and been in an extreme bull market. And the bigger problem for me is not to understand whether or not we've called the bottom exactly perfectly, but to understand the market dynamic as to why this is happening. And I think I've cracked it. And it comes down to massive sellers of Bitcoin. And it's not any seller. It's the people that really believe in Bitcoin. And what they're doing is they're actually selling their coins. I want to talk today about what's going on with the markets and why 2025 has been such a bad year and why I think it's actually going to start turning pretty soon. And when it does start turning, we'll get the real bull market. Because when you look at 2025, I don't know how you guys see it, but there's no way that I see this as a bull market. It looks like a flat market with maybe one or two peaks. So that's what we're going to be talking about today. It's Bitcoin's silent takeover, and it's whether or not I've called the bottom a little bit too early. Big show, guys. Let's get the show on the road. Did I call the bottom too early? I don't know. I mean, for me, it's not about whether I called the bottom too early. It's whether I was close enough to the bottom when I actually called the bottom, right? And as I mentioned to you guys, when I did call the bottom, I said, look, most my indicators had actually been triggered. I would have liked to see some more fear and greed. And, if you look now at the fear and greed, what you can see is we had another day of actually extreme greed. Now, extreme fear. This is really what I wanted. I wanted, like, out of 7 days, I wanted 5 days of extreme fear. So it does feel like we're actually, to me, it feels like we're actually bottoming. And to be honest, as long as we don't go much below this 98,000 level, I must say I'm still pretty happy that I'm not going to call the exact bottom, but I'm going to be very close. Obviously, Fefe has jumped onto this, and now he's made a prediction market, right? But now this prediction market is very much basically against me. But I'll take the bet anyway. I said that we'll go to the all-time high before we go below 98,000. Fefe predicts that Bitcoin will go above. That Bitcoin drops below 98,000 before we get back to the all-time high. The bet actually started from here, where I said we've bottomed, and he said, I bet you will be lower than today by December. So, okay, well, let me know what side of the bet you're on, guys. Let's run a poll and let's actually decide what side of the bet that you're on. Anyway, regardless of calling bottoms, not calling bottoms, as I said, for me, we're close enough to the bottom. And what's very important is to understand why it is that we're in this situation where markets are going up and Bitcoin isn't going up. And that's really what I want to spend a long time talking about today, because I really think I found some really good information. Guys, if you're new to the channel, you know what to do. If you're not subscribed to the channel, I mean, I see the guys in the chat, but I mean, come on, subscribe to the channel. I want to see what is this? I want to see the numbers go up, not down. So subscribe to the channel. And if you are here, help me get some distribution here, guys. Smash the like button. Whenever you smash the like button, it really helps us with distribution. And also gives us enough money so that hardest can buy these graphics, which, then help people subscribe to the channel. All right, so let's get into the meat and potatoes of the show today, which is really why we're in a situation where all markets are pretty much at all-time highs. The Nasdaq's at all-time highs. The S&P is at all-time highs. They've all been in raging bull markets this year. And Bitcoin hasn't been in a raging bull market this year. I mean, this is where the S&P or the Nasdaq actually started the year over here. You can see somewhere around there. And that is up 23% today. And if you look at where Bitcoin is, Bitcoin's not up 23%. In fact, I mean, it's pretty much flat or maybe 1% up. And this week, there are going to be some big announcements as it relates to markets, right? The first thing is that you've got the government shutdown now finally ending. So it was the longest government shutdown in history, and it's finally happening. Today at 4 p.m. EST, we're going to get a vote, and then the vote should be to open the government, and the government shutdown should be ending. Once the government shutdown ends, then we're going to start getting the data again. And the first order of business is the inflation data, which actually comes out tomorrow, right? And there's a massive, massive, massive concern that the inflation data is actually negative and that inflation has actually gone higher. I read this article or this tweet, article which led into a tweet by Nick Tamaros, and he says, Fed officials are fracturing over a December rate cut after inflation-focused hawks pushed for a pause after last month's rate reduction. Officials are divided on three questions that come down to judgment. Will tariff-driven costs increase be truly a once-off? Does weak hiring reflect demand slump or reduced supply? And are rates still restrictive? The answers of these can lead to very different outcomes, which pose greater threat: persistent inflation or sluggish labor market, and how to calibrate risks. And so that data is going to, hopefully that data is going to come out on Thursday. No guarantees, because remember, we're still in a government shutdown, technically. And when that data actually comes out, then we've got to watch this chart over here and see how this chart goes towards a rate cut. Because let me tell you that if this chart turns towards no rate cut, then you're going to see Bitcoin coming down. And then, to be honest, I'm going to lose this bet. I'm going to lose this bet very, very, very quickly. On the other hand, if inflation comes in at 3% or whatever it's anticipated to come in at, then I think we're pretty good. So let's wait and see tomorrow with the inflation data. Obviously, we'll be live when the inflation data actually comes out. Trueflation is actually calling the inflation data slightly up. So slightly up. The good thing about Trueflation is that the US government has been closed, but Trueflation has been open and actually providing us with data. So all eyes on inflation numbers tomorrow. I guess the government shutdown basically opens, and we wait and see what data starts coming out and how the data affects the numbers. I'm still bullish for a rate cut in December. However, we have to hope that the inflation numbers come in at 3% or not at 3%. So with that in mind, let's go back to the big question. And the big question is, why is this market in a bull market, this market in a bull market, and this market in a sideways market or bear market or boring market or whatever you want to call this market? And the answer actually lies in a certain chart or certain number of charts. And those charts are actually these charts over here, right? What you're seeing now is you're seeing the long-term holders of Bitcoin actually selling their coins. Now, these aren't normal holders. These are the whales. These are the OGs. These are the people that invested in Bitcoin really, really, really early. And what they're doing is they're selling their coins. And they're not selling their coins like they usually do, because usually what these people do is they are experts of selling coins, of accumulating coins in down markets and selling coins into strength, as you can see over here. And what they're doing now is very, very, very much out of character for these holders. And that's why it's starting to alarm a lot of people on crypto Twitter. Long-term holders are selling their Bitcoin, Mr. Crypto says. This is normally the most bullish cohort of Bitcoin holders. You can't really ignore this data. If you look at the cohorts or the net sums of Bitcoin holders changing positions, what you can see is that, again, in the last, I don't know exactly when this started, but since July this year, what we're starting to see is that these holders are selling. And if you take a deeper look into the cohorts that are actually selling, the biggest cohorts that are actually selling are the 3 and 5 year and the 5 and 7 year cohorts and the 7 and 10 year cohorts, and they're actually selling their Bitcoin. The biggest cohorts being people that have held their Bitcoin for 3 to 5 years. So these are not newbies. These are not short-term holders. These are people that have been holding Bitcoin for a long period of time. And as a result of these sales, and I'm talking to you about really, really big sales. I mean, you had one sale of $9 billion, which was that big one that was executed by Galaxy. And there have been many, many, many others. I'll see if I can find you one or two others here in all the documents. But here's another one of a whale that deposited this whale holds $3 billion. And a whale that hasn't moved funds in 6 years deposited 2,300 Bitcoin into Paxos. And he owns 31,000 Bitcoin. That's $3 billion worth of Bitcoin. And he's basically deposited in to start selling the Bitcoin. And so you need to ask yourself, what's going on? Why are these long-term holders, the people that really, really, really believe in Bitcoin, that have been here for between 3 and 5 years and maybe even longer, why are they selling their Bitcoin? Is something structurally broken with the market? Is it time for us to start dumping their Bitcoin? Or is it something better? Or is it maybe a positive sign? And that's what I want to dig into today. To uncover that, I've read two very, very, very interesting articles or Substacks recently, and I think that they both speak of a similar phenomena, but the one breaks it down a bit deeper than the other one. The first one is a Substack which was written by 𝗤𝗠𝗲. And what he says is, I think a lot of people have actually read this one and it's actually gone quite public, but what he says is, he says, look, he struggles to understand how with the S&P flirting at all-time highs, with the NASDAQ being on a tear, and with everything that's going on for Bitcoin being absolutely, absolutely perfect, right? He says, we have Bitcoin ETFs that launch successfully. We've got the Genius Act. We've got the Clarity Act coming soon. No regulatory crackdown, no major hack, no fundamental breakdown. Everything that was supposed to matter has happened, and it's happened perfectly. So why, against this backdrop, do we not, don't we have a major bull run? And he breaks it down into an amazing story where he compares Bitcoin to an IPO. And I want to play you a little excerpt from his clip with Pomp, and then we'll talk about it, and then we'll get into the other article, which goes much deeper than this article, which has actually been out in the market for a couple of days.
On Bitcoin, and are you giving up? Are you walking away?
No. So a couple things.
Just freeze frame Jordy's reaction right there.
Number one, every possible thing to everyone listening that you would want for Bitcoin is happening right now, meaning the government is supporting things. The financial guardrails are shifting. We've got news after news every single day about the financial guardrails becoming more digital economy. It's things that are necessary for the network effects to kick in. All of that has happened. We still see inflows from retail. We still see the banks now opening it up for people to go through. But there's clearly a bunch of whatever it is, OGs, Bitcoin miners out of China, whoever it is, large amounts. Mike Novogratz publicly said it. If you go back to July, there have been billions and billions of dollars of, let's say, original investors supporting Bitcoin, regardless of how you want to.
So that's the original investors. That is these people over here that have been supporting Bitcoin, and what they're doing now is they're starting to sell. And they're doing this on the background of an amazing environment. In fact, everything that we could have wished for and more, we've basically got, right? And so let's talk about why they're actually doing this.
So I'm writing a Substack. I think what people should think about is we don't have an IPO for Bitcoin, but this last 4 months to me feels like sourcing the pricing of the IPO, where the original investors are getting out of large chunks. Now, why is there ever an IPO? For monetization. If someone has 9 billion in Bitcoin, I mean, I think they should diversify a little bit. If it was related to China, guess what China has now that they haven't had since 2014, 15? A bull market in stocks. Guess what else people have? Well, they have the chance to invest in AI. AI is a 10-bagger in many cases. You've been able to do it in the public markets. So I think at some point, Bitcoin becomes a boring asset to people who are looking for 3-baggers, 4-baggers, 5-baggers. It becomes a diversification. So I think this is just a distribution of a few massive holders. And the weaknesses I have heard about Bitcoin as I've gotten into it from institutions, it's too volatile. Not too volatile anymore. We've taken the implied volatility and the actual realized volatility down to 30 and below in some cases. So the vols come down. Okay, what's the next thing? Well, it's too concentrated in ownership. I mean, I've gone through the numbers. When you add Satoshi's wallet, you add the other whales, you're talking about a third of it has been owned by not many people. I think like 10,000 is the number I heard. Regardless of what the right answer is, every month the Bitcoin IBIT outstanding shares goes up. It's up again this month, even though the price is down. So I think everyone that's depressed has actually become entitled. I think they think it's a risk asset. Oh, there's another one. This is just a risk asset. Okay, well, it's not going up with the NASDAQ, so that's good. Lower correlation. Well, it's just digital gold. Well, it's not going up with gold. So guess what? In portfolio theory, for everyone who hasn't bought any yet, I think with your stocks, with your gold, with your bonds, now there's every argument to make. It's lower volatility now, lower correlation with the other traditional asset class, diversification from gold. I think this thing is going to move higher.
So he talks about that, and he talks specifically around the IPO moment for Bitcoin. Now, what is the IPO moment for Bitcoin? Essentially, when a stock IPOs, you take an existing cohort of holders that have had stock in a company that has been illiquid, and you transfer it to the more liquid market and the more retail investor, which has a very, very, very different risk profile. if you look at most of the people that are buying Bitcoin now, I guarantee you that those guys couldn't stand the volatility that we used to go through in the old days. For most of the investors that are actually buying now, I mean, they couldn't stomach the volatility that we used to stomach in 2017, where the coins used to go like 50% up and down in a single day. And so this very, very, very much resembles an IPO, where traditional long-term people that have been holding the asset from a very, very, very early time now have liquidity. Now, you may say, look, but these guys have had liquidity for a very long time. Not really, because up until now, the liquidity has been very much retail investors. Up until the end of the 2021 cycle, the beginning of this cycle, it was only really retail investors that these people could sell their tokens on, right? But now, these people can actually sell their tokens en masse. If you try to sell $9 billion worth of tokens in 2021, you would basically take the market close to zero. Now, for once, the people that held this can actually sell this without causing massive market disruption. In fact, you've sold 9 billion plus 3 billion plus whatever else, and we're still holding above that $100,000 level. And so what he says in this article is something which is I think quite profound and quite amazing. He says, put yourself in the shoes of someone who mined Bitcoin in 2010 or bought $100 or even $1,000. You've held through Mt. Gox, the China bans. You've held through the 2018 bear market, through COVID, through regulatory uncertainty, through mainstream media calling it a scam for over a decade. You believed when no one else did. You took the risk and you won. Bitcoin now succeeded way beyond everybody's biggest expectations. You're sitting on generational wealth. Life circumstances may change, but you're approaching retirement. You've been holding this thing for 20 years or 10 years. Maybe your kid's into college, etc., etc. He says, for the first time ever, you can actually exit your position without destroying the market. He says that's new, and that's the liquidity that basically happens. He also talks about how these people are very, very, very similar to the IPO market. And he says, when a company goes public, the early investors begin to sell their position. The stock often consolidates, even during broader market rallies. Why? Because there's a specific dynamic at play. Early investors aren't panic selling. They're methodically distributing their positions. They're being careful. They don't want to create a crater because they still hold a lot of shares. They're patient. They've waited years for this moment, and they can wait months for the right time. And that's like, the truth is that if you look at like IPOs and you look at the Facebook IPOs, you can kind of say that there were two cohorts of investors, right? First were the investors that invested before the IPO in 2012. And then from 2012, there were a bunch of investors that invested at the IPO valuation, at the pre-IPO valuation of $50 billion. And right now at $1.5 trillion, basically these guys have made an amazing, amazing, amazing return. The same thing with Uber. Like Uber IPO'd in 2019, and the investors that have held it for 6 years since the IPO have made like 150% on their money, right? The investors that invested before they had a different risk profile and a different risk calculation. Now, those that were ready to take that risk should be rewarded for what they were doing, and they should be allowed to sell, right? They should be allowed to sell and to take their profits and to actually start moving on. So that's 𝗤𝗏𝗪's theory, and he says, I can already hear the skeptic. It sounds like you're rationalizing a bear market. It's not a bear market. And he says the reason why it's not a bear market is because bear markets are driven by fear, by macro conditions, or by loss of faith in the underlying narrative. And that's pretty much not the case now. In fact, if anything, it's the exact opposite of that. We're not in fears of whether Bitcoin is a thing or not. The macro conditions are very much against us, and there's no loss of faith in the underlying narrative, right? This doesn't sound like a bear market. So that was the first Substack. The second Substack went a lot deeper, and I really, really, really enjoyed reading this Substack. It is a Substack by a guy called 𝗪𝗏𝗪. And what he says is the following, right? He says that, let's see if I can actually find you his tweet over here. If not, we can just go straight into the actual Substack. But what he says in his Substack is, he says, between July and November 2025, which is this chart over here that I showed you guys, it's this chart over here. What he says is, he says that long-term holders, wallets dormant for over 155 days, which is that cohort that I showed you, that the biggest cohort was the 3 to 5 year cohort, distributed approximately 300,000 Bitcoin into the market at an average price of about $110,000 a Bitcoin. This represents $33 billion in realized gains and establishes between 5 and 10,000 the gains come from the established cost base of between $5 and $10,000, right? He says, yet Bitcoin hasn't collapsed. It's consolidated within a tight $95,000 to $106,000 range, exhibiting an annualized volatility of 35% or half its norm of 60%. This diversion between selling pressure and volatility or muted price is huge, and it exposes the mechanics of institutional absorption at a scale previously theoretical. In other words, exactly what Jordy says, that this is the first time that these early IPO investors can sell their Bitcoin. He says, on-chain data from Glassnodes says that the long-term holder supply, which peaked at 14.7, which is this over here, in July, the long-term holder supply had 14.75 million Bitcoin, and that has been coming down all the way to where we are today, which is where these guys have sold 300,000 of their Bitcoin. He said, though, simultaneously, US-listed Bitcoin ETFs and treasury companies have basically absorbed this selling pressure. And you can see that if you look at this chart over here, the selling has been done by the early OGs, and the selling pressure has been absorbed by 𝗖𝗿𝘆. So if you look at 𝗖𝗿𝘆 in July, 𝗖𝗿𝘆 in July had a total of 4.65 billion. Sorry, let's just go to the top here. So total of 130 billion. And now today they've got $140 billion worth of Bitcoin. So he says, on top of that, the treasury companies have also been absorbing Bitcoin. So if you look at all the treasury companies and the mining companies, they've also been absorbing Bitcoin. So on the one hand, you've got the large whales selling, and on the other hand, you've got the supply being absorbed by this amazing thing. He says at the same time, the 4-year halving cycle has completely failed, right? Because the framework that predicted nearly 150% post-halving returns delivered just 41% through November. And the reason why, he says, is structural. It's not cyclical. Previous cycles operated in markets dominated by retail speculation and minimal institutional infrastructure. But this market, the 2024 approval of the Bitcoin ETF, created vehicles that don't trade momentum, but actually absorbed volatility. So what happened was that instead of getting a volatile asset, the introduction of institutional capital has made the asset less volatile. He says, and the microstructure actually tells basically a story. He says, exchange balances have declined materially while OTC desks and ETF custodies have actually surged. Coins aren't being sold for dollars and withdrawn, they're being transferred from exchanges to hot wallets. Coinbase custody, Fidelity custody, digital custody. Ancient supply, coins unmoved for over 5 years, representing over 17% of total issuance. And you can see that over here, and you can see that cohort of coins over here began circulating when dormant whales moved coins with low volatility. He said, Bitcoin's maturation from a speculative asset to an institutional reserve asset occurs against a backdrop of unprecedented sovereign debt stress. And we know that the US has got the biggest debt of above $35 trillion, with net interest payments consuming 15% of the Federal Reserve, a figure that approaches crisis thresholds if rates remain elevated. China banned Bitcoin mining and transactions. The US approved ETFs and integrated Bitcoin into capital markets. Even if 1% of pension assets conservatively valued at 50 trillion are allocated to Bitcoin, that's $500 billion in incremental demand and at a market capitalization of 2.1 trillion. ARK Invest projects 6% of institutional portfolio penetration by 2030 with a $3 trillion addressable market. Okay, so basically what he's saying here is he's saying, look, the market is shifting and the old OG investors are now shifting their risk to the institutional investor, very similar to the IPO investor that was willing to take the very volatile risk and to transfer it to other people's risk who are willing to take less risk. Now, those people, it's not like they're going to get no returns, but they're going to get different returns. Like, as I said, Facebook IPO'd at 50 billion and today's trading at 1.5 billion, or IPO'd pre-IPO at 50 billion. And then when they IPO'd, they were at 140 billion and now they're at $1.5 trillion. There's still a return, but there's less return and there's obviously less risk and less volatility. And so what he's saying here is that if you look at the on-chain data, you'll realize that the reason why Bitcoin hasn't been pumping and why the market can't go up is because there's a transfer of coins from the original early stage investors that were willing to take risks to a new cohort of investors that isn't taking the risk and therefore doesn't deserve the whole return. Those that are getting the returns will probably take that money and invest it back in blockchain, back in AI, and that should stimulate what you want to call almost like the VC market in that space, because they're looking for those returns and they can actually take those kind of risks. The pattern is not an unfamiliar pattern, right? So if you look at this pattern over here, this pattern is what they call the IPO chart, right? So if you look at the Bitcoin pattern versus the IPO chart, which is the average IPO performance in the last 5 years, that looks like a very, very, very familiar chart. And if you look at the charts themselves, what you can see that is exactly what happened. So here it is, you drop. This is a period of consolidation on Facebook where all the insiders were dumping their coins, right? And then once the insiders had dumped their coins and the market reached some kind of equilibrium and the coins were in more institutional, more stable hands that don't sell and on every volatility, then the price of Facebook was up only. Another one which really shows this is Robinhood. So this is their IPO. They listed on the IPO. They shot up a lot. The insiders start to sell. The people that have been locked up for years start to sell. It takes 2 or 3 years to shake them out of the market. And then all of a sudden you've got this massive run. This happens with every single IPO. The Amazon chart basically tells the same story. Consolidate, let everybody sell, and then basically go up there. It's exactly this phenomena. And right now what we're seeing is the old coins moving into new hands, which are much more stable hands. And the result is that we're going to get a lot less volatility in the underlying asset, which is good because it makes the asset more investable. And if we want the higher returns, we can go to the altcoins and we can start looking for the 20s and 30s and 40% returns. Now, both of these analysts said that it's not a bear market and that this is not a bear market. Jordy's reasons for it not being a bear market were the following. He says, right now, the Bitcoin fundamentals are strongest they've ever been. He says, let's just go back to it. Anyway, he said that this is definitely not a bear market. What Shanaka basically says is he says the following. This is when I will say that my network or my framework here is falsified. First, if sustained ETF outflows exceed $500 million weekly, coupled with rising exchange balances, that would indicate that institutions are distributing, not accumulating. This has not occurred. November showed inflow resumption after October's temporary outflows. So the first thing he's saying is, look, for as long as the ETFs and the treasury companies have increasing and are not decreasing, the framework is in place that these guys are actually absorbing the demand that is being sold by the early investors. Second, he says the long-term supply rebounding above 1% quarterly growth. That would suggest that early adopters are reaccumulating rather than exiting. Current trajectories show continued decline, which is consistent with a generational wealth transfer. So the second thing is he says, look, I'll change my thesis if the whales actually start buying, because remember, whales actually land up buying into a bear market. The third thing he says is the following. A decisive break below 100,000 with expanding volume, with spot leading futures to the downside. That would signal that the defended level has failed. Bitcoin has tested but not broken this threshold. Each retest has been met with institutional buying, which is true. The liquidations all happened on leverage coins, and I think I might even have a chart to actually show us that. I don't have that chart, but do I have a chart? No. So yeah, that is it. Here's the chart. Futures to spot volume. What you can see is the spot to future volume is actually increasing at the moment, right? And what that shows is that the institution, that the majority of the moves down are the institutions, and the spot people are actually landing or have landed up buying this. He says, even if, so here's the falsification of it. He says, a third is the decisive break with the spot leading the futures. He says, conversely, confirmations that the accumulation phase is complete, spot-led rallies above 112,500. So we're in a spot-led rally at the moment, and we've gone from 100 to 104,717. On expanding volume, ETF inflows exceeding 500 million weekly for 4 consecutive weeks. And that is, by the way, exactly what's happening. And so he says at the end, he says, what institutions understand and retail consistently misses is that Bitcoin's value proposition isn't its transactional velocity, it's monetary finality in a system where central banks hold $25 trillion in assets against a global GDP of $115 trillion, where fiscal dominance makes independent monetary policy structurally possible. Bitcoin offers governments and corporations a credible exit from treasury-only reserve paradigm without adopting a competitor's sovereign debt. For institutions, it provides uncorrelated returns, 24/7 liquidity, programmatic scarcity, and settlement finality without counterparty risk. A transfer from cypherpunks to institution isn't betrayal, it's adoption. The question was never whether Bitcoin would survive, it was always whether it would remain a niche speculation or evolve into a systematically important asset. And the answer is crystallizing in real time. Investment implications for risk management. He says, for investors, the regime change demands tactical recalibration. The expectation of 70% drawdowns followed by 10x rallies that defined 2013 to 2022 no longer is relevant for the market structure. Institutions dampen volatility in both directions, compressing drawdowns, but also extending consolidations. The optimal strategy becomes accumulation during support levels rather than waiting for capitulation that may not arrive. The 88,500 realized price represents catastrophic support, and that is this price level over here. It's somewhere over here, right? And he says, if that support level basically breaks, hold on, which one was I actually reading? So he says, if that support level actually breaks, then that represents catastrophic support where aggregate holders break even. The 100 to 112 represents the range of equilibrium where institutions defend and retail capitulates. He says, the conclusion, financial history suggests paradigm shifts are only recognized retrospectively. The transition from the gold standard to the fiat standard occurred across decades, with participants debating the viability at each inflection point. Bitcoin's integration into institutional portfolio will likely follow a similar trajectory, gradual then sudden. The evidence suggests we are past the gradual phase when the largest asset managers in human history accumulate 1.4 million units of a scarce digital assets, when corporations leverage their balance sheets to acquire more, when the volatility compresses to equity-like levels despite massive holder rotation. The question isn't whether institutional adoption is happening, it's basically how fast. The question is whether you recognize it before price discovery was made it obvious. 100,000 floor isn't a technical level, it's a declaration, and declarations are made once entities controlling trillions of dollars in capital tend to be defended. And that's my view on why this market is pretty much going down. The 4-year cycle is dead. The early Bitcoin holders are cashing in on their pre-IPO investment, and the asset is changing its lifespan. And if you're here because you want to get the crazy returns, well, then you got to be investing in the next Bitcoin. You got to be investing in the Solanas. You got to be investing further down the risk curve. And if you can weather the same volatility that we weathered in 2017 and weathered on Solana and whatever else, well, you can see that there definitely returns to be gotten. But you've got to weather the risk. I'm getting some messages here from Trueflation. So tomorrow is, as we said, tomorrow is inflation. We'll talk about that. Anyway, listen, let me know what you think about the theory. Let me know if you believe. I really believe that this theory is what's actually been keeping the prices down. Let's quickly just check in on Trueflation with inflation for tomorrow. Trueflation daily update. Dozen eggs hasn't gone below the 3.54 on inflation. Blah blah blah. Let's see. So what is the? Okay, that's the eggs index. Okay, we're not talking about the eggs index. We need to know what the inflation index is. Before I go, I want to just remind you that if you're looking for a cold wallet, or if you're looking to get your coins off exchanges, to be like the whales and get your coins off exchanges, you can get these amazing Tangent wallets at like crazy prices. These wallets basically mean that you don't have to have a seed phrase anymore, and that you can basically just use these cards as your wallet, where the cards basically store the seed phrase. And if you lose the card, you basically have another card which can replace it, and no one can actually transact just with the card because you need a device as well. Also, they've got this amazing ring, which is basically your wallet in a ring, or your seed phrase stored in a ring, which is, I think, absolutely amazing. There are amazing specials. If you click on the link below and you get onto the Tangent page, you'll actually see the specials out there. And I think if you, again, those that made money on Bitcoin in the old days all kept their money on cold wallets, and if you didn't, at some point you definitely would have been hacked. Anyway, let me know what you think in the chat. Otherwise, I'll see you guys again tomorrow. Until then, trade well, my friends.